Global mergers and acquisitions volumes off to a rough start in 2023, seeing a 48% drop year over year in the first quarter. While fears of a recession feed into a slowdown in M&A, an uptick in big deal making in recent weeks may be signaling a new trend. Here are the details is Yahoo Finance's Canal. Allie, what are you watching?
Hi, Rochelle. And yes, it's been an interesting few years when we look at M&A deal-making activity. In 2021, we saw these historic levels largely due to pandemic stimulus. But then in 2022, we saw this steep drop-off as the Fed once again began raising interest rates, which increased the cost of borrowing. On top of that, we saw the slowdown continue in the first quarter of 2023 as investors and acquirers, financiers remained concerned that a recession was on the horizon. We also have geopolitical tensions, antitrust fears, and even the recent banking crisis adding to negative sentiment. M&A volumes in the first quarter were down 70% in Europe, 44% in the U.S., and 29% in the Asia-Pacific region, contributing to the lowest level of M&A activity that we've seen in more than a decade. That's according to a Reuters analysis. However, as you alluded to, there are signs of optimism that deal volume could increase this year, and we've already seen pretty sizable deal making to support that. Late last week, it was reported that Sega Sammy, the Japanese maker behind Sonic the Hedgehog, was nearing a deal to buy Rovio, the maker of Angry Birds, for about $1 billion. There's been deals in the healthcare sector with Merck buying Prometheus Biosciences in an all-cash deal valued at just under $11 billion. And then in the media world, we saw Endeavor, the owner of UFC, acquire WWE in a deal estimated at just over $9 billion. And within that media space, there have been reports that Paramount is possibly exploring selling all or parts of its business as it refocuses its streaming strategy. Other possible deals revolve around the energy sector, with ExxonMobil reportedly eyeing Pioneer Natural Resources. So there are signs of life, even if deal making has significantly slowed over the past year or so.
So then in terms of momentum then, which sectors do you think will continue to see greater M&A activity in their year ahead?
I think the tech sector is still ripe for potential M&A, especially as there are a lot of opportunities for both organic and inorganic growth. But remember, there are concerns about antitrust. We still have that Microsoft Activision Blizzard deal still in flux as the FTC cracks down on certain deals that are happening in that space. So overall, I think there's a lot of uncertainty in this market right now. I think a lot of it will depend on how the macro plays out. But there does seem to be this pent-up demand, especially as investors are refocused on profitability. There's also depressed stock valuations, which obviously is attractive for some of these larger firms to snatch up those smaller players. So we'll see how the rest of this year plays out, but it's looking like it could be a better year than 2022.
Certainly deals to be had. We'll have to see if the Biden administration, though, not looking like they like all of these big mergers and acquisitions, though. Allie Canal, thank you so much.